Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, Apple has closed down to 179.66, and I'm further expecting to have it further a decrease later in the beginning of next week. And SQQQ closed down 4.55% as Nasdaq continued to making constant growth and steady growth. S&P 500 ETF SPY closed up 0.94%. United Natural Gas closed down 0.73%. Today, the asset of my count is 67,101 and 18.31. Today, the PL is a loss of $402. Today, Dow Jones Industrial Average closed up 0.23%. Nasdaq Composite closed up 1.14%, and S&P 500 closed up 0.8%. Semiconductors and biotech all closed up with a gain of more than 2%. Today, the S&P 500 and Nasdaq closed above 51,100 for the first time. Today, data shows that the S&P 500 closed above 5100 for the first time, and the market is continuing to focus on the U.S. stock earnings and the Fed rate cut prospects. Data showing further declines in the U.S. manufacturing in February and a weak consumer confidence as the UMISH reinforced expectations of a June rate cut. On Friday, the S&P 500 rose as high as 5,140.33, and Nasdaq rose as high as 16,302.24, both hitting the all-time intraday highs. All three major U.S. stocks indices posted gains in February, and the AI boom and expectations for a Fed rate cut pushed the stocks higher. On Friday's U.S. economic data, a gauge of U.S. manufacturing activities accelerated in February as new orders, production, and employment shrank, suggesting the sector is struggling to gain momentum. The ISM Manufacturing Index fell 1.3% to 47.8 from the Institute for Supply Management ISM hit in January. The index is below 50, which means that it is in the contraction mode and below what most economists have expected. Demand was weak in February. After new orders index rose by the biggest month in more than 3 months, both production indicators and manufacturing employment indicators fell to their lowest level since July. The inflation data on Thursday showed the U.S. Personal Consumption Price Index rose 0.4% in January from the previous month, the biggest increase in nearly a year, but in line with market expectations. Vital Knowledge founder Adam Crisfoley said, "We are still firmly in the camp that inflation is falling, and that the Fed will be forced to cut interest rates in June." The PCE data is a relief to those who have prepared for the worst. For the market closely watching when the Fed will shift to easy interest rates, this report will help restore confidence that the Fed will start cutting interest rates in 2024, not whether but when. Manufacturing is showing encouraging signs of emerging from the malaise of China for much of the past 2 years, said Chris Williamson, chief business economist at S&P Global Market Intelligence. In addition, sentiment was calmed by Thursday's first-time jobless claims data, showing a weakness in the job market. The January core PCE index supported a cautious rate cut strategy by Fed policymakers. San Francisco Fed President John Daly said on Thursday that central bankers were ready to cut interest rates if necessary, but they stressed that a cut was not urgently needed given the strength of the economy. Atlanta Fed President David Bostic said the central bank could start cutting interest rates this summer. Cleveland Fed President David Mester said Thursday's PCE inflation data, so policymakers had more work to do to cool price pressures, but that won't change her expectations that the Fed could cut interest rates 3 times this year. Right now, to summarize, the market now sees a 76% chance that the Fed will start cutting interest rates in June, and is expected to cut interest rates by 82 basis points this year. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.